Well, good morning. It's me, Kenny Polcari, your host of the party. And I know I've been off the grid for a couple of weeks, off and on. Hopefully now I am back, all right? Here I am back in Florida. You can see we expected a hurricane here in Florida. In fact, it's hitting Tampa right now. It's a Category 1, so not the end of the world, but it feels like there's also a hurricane hitting our markets on Friday and hitting them again globally this morning as this hurricane passes around the world. Anyway, today is Monday, August 5th, 2024, and here are the things you need to know. The meltdown appears to be here. Global stock markets under pressure. Japan down 12% and Europe down about 2.5% across the board. And U.S. futures are pointing lower again today, at least 2+%. The NASDAQ down 4+%. So it looks like it's going to be another ugly day. More panic because the Fed is expected to call an emergency meeting, suggesting that they missed the mark with rates. Warren Buffett sells some Apple, Tesla, and Nvidia, and that alone causes more angst. Investors saying, what does he know that we don't? And so what should we do tonight for dinner? We're going to try the chicken soup because, as your mother always says, chicken soup is good for the soul. Okay, so stocks started last week weak and ended the week even weaker, right? On Friday, if you haven't heard, stocks got pummeled, right? The Dow lost 610 points. 1.5%. The S&P gave up 100 points, 1.8%. The NASDAQ gave up 418 points, or 2.5%. The Russell lost 75 points, or 3.5%. The Transports gave up 430 points, or 2.7%, while the equal-weighted S&P gave up 120 points, or 1.7%. Now, just for reference, the Dow is down 4.6% off the July high. The S&P is down 6%. The NASDAQ is down 11.2%, putting that index in official correction territory. The Russell is down 9%. The Transport's down 6%, while the equal weight S&P 500 is down 4%. So all of the indexes are still within the normal trading band, except for the NASDAQ. But like I said, this isn't the end of the story by any stretch. So let's look back to Friday. Okay, it was ugly, but don't be surprised if it gets a bit uglier in the weeks ahead. In fact, take a look at what happened overnight in global markets. Asia, right, down significantly. Japan down 12%. The rest of the markets down about 2.5%. Hong Kong down 1.5%. China down 1.2%. Australia down 3.7%. Taiwan down 8.3%. Thanks chips and technology, right? And South Korea down 8.7%. And this morning, the European markets are under pressure again. The UK is down 1.5%. The CAC 40, which is France, down 2.2%. Germany, the DAX, is down 2.4%. Spain, the IBEX 35 is down 2.7%. And Italy, the FTSE MIB, is down 3.1%. And this after the beating that they also took on Friday, down 1.5% to 2.7% across the board. U.S. futures this morning are not getting any relief either. Dow futures down about 770 points. The S&P down 150 points. The NASDAQ down 750 points. And the Russell lower by 100 points. These are dramatic moves. Okay, so why? Well, first, we're in a seasonally weak time of year, something we've been discussing for a couple of weeks now. 2, because the economic data. 3, because we've been talking about a correction for months now. And 4, the Mideast is on the verge of yet another crisis. Some are thinking that Iran will move on Israel sometime today. Whatever it is, all we needed was an event or a headline that didn't agree with the narrative that we were getting, that we were going to get this soft landing because the economy was fine and inflation was taming and the job market was robust, with unemployment below 4% for months on months, even as the data was pointing to a weakening economy. Friday's non-farm payroll report was just that event. Unemployment jumped to 4.3%. We only created 114,000 new jobs. Wages fell both year over year and month over month. And durable goods were weaker. So that didn't help the tone on Friday at all. The consumer was and is beyond stretched, right? Wages are not keeping up. PMIs in the manufacturing sector were further in contractionary territory. Housing has been weakening across existing home sales and pending home sales and new home sales as mortgage rates stayed above, well, 6 3/4 or so, 7%. It's only scratching, all these signs only scratching the surface of the weakening that we've been experiencing. Now, they were convinced that the Fed had it under control. I mean, the algos were always convinced the Fed had it under control and was able to navigate the soft landing and kept telling everyone they could, right? Telling us to be patient. the same way they kept rates at 0 well beyond when they should have, because inflation was transitory. How's that working out? Remember, the first rule of investing is that the pendulum always swings too far to the right, and then it swings too far to the left, right? As it looks for stability, as it looks to find the middle. Sometimes which it really never does, right? Now, we went too far to the right, so get ready to go too far to the left. And so for long-term investors, this once again speaks to having a plan, not panicking. Gabish, do not make emotional decisions. As long as you own quality names across a range of sectors with pristine balance sheets and ongoing growth. Now, some of them are not gonna be that sexy, right? This is where boring remains beautiful. And right now, cash can't be any more boring than that, any more beautiful than that. But if you want to continue to put money to work, then think utilities, consumer staples, basic materials, financials, energy, pharma, etc. You can also consider tech names that have gotten unnecessarily beaten up, right? Great names that are just down more than 15%, right? But again, if that's the plan, do so very, very cautiously and over time. Do not go jumping in head over heels. Now, using the contra trades also works well to help you offset your long losses, right? By going short different parts of the market. So again, the DOG, which is the Dow, or the PSQ, which is the NASDAQ, the SH, which is the S&P, the VIXI, which is the fear index off the VIX, are just a few of those names to consider. But again, remember, those are not long-term plays at all. They are strategic moves that you use only for relatively short times. Now, tech, which was and still is a very crowded trade, will continue to come under pressure as the big rotation continues, which doesn't mean you jump ship. It just means you might, not must, take some profits or money off the table and then let it go. Do not put more money into that trade just yet if you're feeling nervous and anxious. Here is where patience is a virtue. The best time to put new money to work is when they start tossing it all out the kitchen window, right? Dramatic moves like these suggest that we're getting close to capitulation. And while it's not comfortable for the long-term investor, it does create great and fantastic new opportunities. And that rotation out of equities also includes a rotation into bonds, right? Did you see what happened in the bond market last week? The TLT, which is a 20-year bond ETF, which was down nearly 6% on Monday, is now flat. The TLH, which was down 4% on Monday, is now up 0.8%, and the AG, which was down 0.8 on Monday, is now up 1.1%, and likely going higher today. Now, those are tremendous moves in the bond market. The 2 years now yielding 3.8%, down from 4.4%, a massive 14% decline in just 1 week. The 10 years now yielding 3.73%, down from 4.17%, or an 11% decline. The 10 year has now broken the 3.79% yield seen on December 27th of 2023. And mortgage rates are now 6.375 as of Friday. But after today, likely going a little bit lower. Why? Because the bond market is convinced that both the Biden administration and the Fed have screwed it up, putting us on the verge of a recession, which is comical because I think many of us already think the recession's already begun. They're not convinced that inflation is a non-event and that growth will stall, right? So the Fed must do something now. And guess what? Now the bets are gearing up for a 50 basis point cut in September. Unless, of course, they decide to call an emergency Fed meeting and make a cut prior to that date. Rumor has it, it's about a 60% rumor, that the meeting is going to happen sometime this week, which would really create panic amongst the algo paparazzi, because that would suggest even more panic behind the Iron Curtain. In my mind, if they do nothing now, the algos are not going to stop selling as they look to put more pressure on JJ, forcing him to go into the corner. This is when it's going to get really interesting, because if they cave, then they have to admit that they've messed it up. Listen, I have other words I could use, but it is what it is. In addition, it puts pressure on the government to slow or stop this out-of-control spending. So that's good, right? In the end, the moves up and up and up only amplified the pain that was to come once we got hit with the news that no longer told the same story, right? The further we got away from the trend lines with no pullback, means that the quicker and more painful it is once that we do. And now it looks that's exactly where we are. Over the last couple of weeks, I've reminded you that even the slightest sign of weakness will cause the trader types and the algos to hit the sell button. I identified levels to watch. The 50-day moving average at 54.49 was the first level. 53.07 is the next level, right? A level that will certainly pierce at 9:30 this morning. And the 200-day moving average is at 5,000, a level that takes us back to the April lows and represents a 13% move lower, right off the high, putting us in official correction territory for the S&P. We're not there yet. That's only if we go there. Now look, moves like these create a lot of technical damage as we break trend lines and trend supports. In the end, all it means that the moves up were well overdone. Now, the news over the weekend that Uncle Warren sold half his Apple holdings and some Tesla and some Nvidia is not helping, right, the psyche. For many, that only suggests another reason to bail, causing many to ask, if Warren Buffett's bailing, then what am I doing? And so watch as the panic in those names specifically builds. Oil continues to come under pressure, trading at 72.06. Remember, last week I told you that it has now broken its long-term trend line at 76.72, leaving it struggling for stability, and that we could easily test the $72, $74 range before finding stability, and bang, that's exactly where we are. The next stop is the December lows of $70 for a barrel of oil. On Monday, July 29th, the S&P closed at 54.63. On Friday, August 2nd, the S&P closed at 53.46. Interesting, right? The same numbers, just in a different order. In any event, the sell-off that we've been expecting is here. The move is more than a shakeout that many would have preferred. In times like this, though, it's best to remain level-headed, remembering that the moves down are being exacerbated by the technology that is supposed to create efficiency. In times like this, it creates havoc. So now, so far, none of the four indexes, the Dow, the S&P, the NASDAQ, and the Russell, have yet to pierce their RSI index on the downside, right? That they got to hit 30. They're not anywhere near that yet. So that suggests that maybe we have a bit further to go. Talk to your advisor if you have one, and if you don't have one, feel free to call me. I'm always available to talk. 914-420-3836. Okay, so what are we having for dinner? We're having the chicken soup, right? As your mother always says, have some chicken soup. It's good for you and it's good for the soul. So here's how I make it. First, I use 5 thighs, skin on. Now you can use breast if you prefer, but make sure the skin is on. Chopped onions, carrots, and celery. You need water, salt, and pepper, and 1 chicken bouillon cube is how I make it. You can add in a can of chichi beans at the end if you want, just to add a more texture to the soup. Now, rinse the chicken pieces in the kitchen. Place them in the pot. Fill the pot with water. Now add the chopped veggies, season with salt and pepper. Add the bouillon and bring it to a boil. Once it boils, turn the heat down to medium-low, and then let it sit on the stove and simmer for about an hour and a half, maybe 2 hours, right? You have to have water. You have to add water as it goes because much of it will steam off, right? When it's done, turn heat off. Remove the meat and allow it to cool. Add in the can of chichi beans here at this point if you want, but again, remember that's optional. Now, when it's cool, when the chicken meat is cool, remove the skin and debone the chicken. Slice the chicken pieces into chunky pieces and then return them to the soup. Now place the pot in the fridge and allow it to cool overnight so the fat rises to the top. It forms like a fat skin, right? You know what that is. Now remove it from the fridge and take the fat off and then discard it. Reheat and serve it along with rice or with elbow macaroni. Have plenty of fresh grated Parmigiano cheese for your guests and even for you. It's really a great meal and one that works really well when you're feeling, A, you're not feeling good, and B, when you're feeling uncomfortable. There's nothing like a good bowl of chicken soup. In any event, the skies are stormy still, right? The hurricane is now hitting up in the Panhandle in Florida and likely going across into Georgia and then the Carolinas. It's not here, but the sky appears to remain stormy and expecting rain and hard rains here all week as we move through the tail part of the hurricane that's now hitting the Florida coast. In any event, until tomorrow, take good care.